Good morning, everyone, and happy Thursday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here. My first physical therapy went well yesterday, but I am definitely a bit more sore this morning, but all in the name of progress. Now this morning we're going to be taking a look at exciting stock market news, most which has to do with notable earnings reports. So we're going to start off with some of the big news from earnings last night, and then we'll move over to the morning's earnings as well, and we'll see which stocks are the morning's biggest gainers and losers. Don't forget to follow the link down in the description to get that TipRanks mobile app on your Apple or Android device so you can access all of your favorite research tools on the go. Now let's get right into this morning's exciting stock market news. U.S. stock futures are comfortably into the green this morning, which we love to see. Right now, Dow futures are up 0.61%, S&P 500 futures up 0.76%, and NASDAQ futures up 1.15%. Last night, Walt Disney reported earnings, their first time doing so since Bob Iger returned as CEO to the company. They beat on earnings and also announced some cost-cutting measures and that they plan to work to reinstate their dividend. The restructuring includes cutting 7,000 workers, and Disney will reform into 3 company-wide business units, which will be Disney Entertainment, ESPN, and Disney Parks Experiences and Products. They'll also be pushing for new efficiency that targets $5.5 billion in cost savings. For the dividend, they plan to ask the board to approve the reinstatement of it by the end of the calendar year. And getting down to the actual numbers, for their Q1, Disney beat on both earnings and revenue estimates. Their Q1 earnings per share came in at 99 cents, beating expectations by 20 cents per share. Meanwhile, their revenue of $23.51 billion was up nearly 8% year over year, beating expectations by $230 million. Analysts currently rate the Disney stock a strong buy with an average upside of 7%, but some more bullish price targets coming in just today. Then we also have Robinhood, and there is a lot to process with this one. The stock is on the rise this morning, despite missing on both earnings and revenue, and saying that they had a $57 million loss due to a processing error. But they do plan on getting a stake of their company back that was seized from Sam Bankman-Fried. Robinhood said that they lost $57 million because of a mistake processing shares in a tiny healthcare company back in December, and that error cost them about 7 cents per share in this fourth quarter. That was the difference between the company beating and missing earnings expectations. But Robinhood also said that their board has approved plans to buy back 55 million shares that had been originally purchased by Emergent Fidelity Technologies, which is a firm that was tied to the disgraced Sam Bankman-Fried. While they did miss on earnings and revenue expectations, they did see an increase in average revenue per user. Their Q4 loss per share of 19 cents missed expectations by 7 cents per share, and revenue of $380 million fell about $15 million short. Analysts currently rate their stock a hold with a mix of buys, holds, and sells coming in today. Next up, we have Affirm Holdings. Their stock is dropping down nearly 19% this morning after the company dimmed their future outlook and announced they would be cutting 19% of their workforce. They'll be letting go of approximately 500 employees, citing higher borrowing costs and macroeconomic headwinds. Their CEO said that we began increasing prices for merchants and consumers later in the year than we should have, and this had a negative impact on our ability to approve more consumers and improve our margin. Their stock is currently rated a moderate buy with an average upside of 24%, but we do have some sells coming in today. And on the flip side of that, we have Sonos. Their stock is up over 15% currently after they had a solid earnings beat and reaffirmed their full-year guidance. They reported Q1 earnings per share of 79 cents, which beat expectations by 20 cents per share, while revenue of over $672 million grew slightly but beat expectations by over $92 million. Their stock is currently rated a moderate buy with just 2 current analyst ratings and an average upside of about 40%. Now, shifting to today's earnings. In the after hours today, we'll be hearing from PayPal, Lyft, Cloudflare, and Expedia. In the pre-market this morning, we've heard from PepsiCo. Their stock is up slightly after beating on earnings and revenue and increasing their dividend. Revenue came in significantly higher at $28 billion, growing about 11% year over year and beating expectations by $1.18 billion. Their Q4 earnings per share of $1.67 came in just 2 cents ahead of expectations. Analysts currently rate the Pepsi stock a moderate buy with an average upside of 13%. Also coming in ahead of expectations was Hilton Worldwide. They reported Q4 earnings per share of $1.59, beating by an impressive 37 cents per share. Meanwhile, their revenue of $2.44 billion grew over 32% year over year, beating expectations by $90 million. The company also initiated fiscal and Q1 outlook. Analysts currently rate their stock a moderate buy with a very slight upside. And once again, another beat, we had Philip Morris. They had revenue of $8.15 billion, beating expectations by $610 million, and their earnings per share of $1.39 came in 11 cents ahead of expectations. Analysts currently rate their stock a moderate buy with an average upside of nearly 9%. We had a bunch of companies reporting this morning, so here is a quick overview of some of those. First off, we have AbbVie. The pharmaceutical company did beat on earnings but missed slightly on revenue. Duke Energy came out with a beat on both earnings and revenue. And AstraZeneca, who did beat on earnings but missed on revenue. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by AppLovin after they posted better than expected results for their quarter. Trading under the ticker APP, their stock is currently up 28.5%. They're followed by Sonos under SONO up 13.7% and Tapestry under TPR up 9.35%. And our biggest losers this morning are led by Affirm Holdings following their earnings and layoff news. Trading under the ticker AFRM, they're down about 18%. They're followed by Globus Medical under GMED down 12% and Mattel under MAT down nearly 11%. So that is going to be everything for Thursday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, don't forget to hit that thumbs up button and say good morning. I always appreciate hearing from you guys. Thanks so much for watching. Have a wonderful day, and I'll see you back here next time.